Hello to you all. Welcome to the full explanatory video of calculus product, which is mainly designed for swing trading in cryptocurrencies, especially Bitcoin and Ethereum. In this case, this strategy is fully made by volatility and volume logic inside, and together with that, so we get the volatility and the volume prices, I would say movements and so on. And with all of that, we are creating our own candles. So you can see in this case that, for example, the candle that we are going to be used is going to be the close of the value that we are going to use is going to be the close of the candle, which is going to represent the white line. And in this case, I'm going to make a double deviation, positive and negative, from the current point. So let's say right now our price is at 42, but by my volatility calculation and my volume calculation, actually the price that I'm using is going to be 29. And as well, for example, the high is going to be 30.40, while in this case going to be the low is going to be 29.400. So if I'm going to use these differences, yeah. So with those values, you can see that, for example, when you have big swings, yeah, we are going to have big swings here as well, but we are going to get more the data from the volume point side than just full price action. And with these two parts of the logic, together of course with some price action, like for example, we are checking to see if the price has been ascending, descending, stuff like that. With these two rules, I'm going to create a very simple one, like a Bollinger Channel. So in this case, like for example, if we are going to cross the lower band, it's going to represent a short entry, and if we are going to close the upper band, it's going to represent a long entry. And in this case, you can see that, for example, here on the right as well, we have the data for the last years. This strategy initially was released in October 2020. So yeah, you can take into account that all the data since then, it can be used like a forward data, I would say. But at the same time, by looking into it, since we have a very short amount of parameters, so in this case we have those three. If you want to use for the volatility the true range or the difference between high and low, the length of the candles that we want to see for that volatility calculation and volume calculation, and the multiplier is going to be the additional value for the upper and the lower band. In this case, we are going to use the same settings for BTC and ETH, but the difference is going to be the time frame. BTC is going to go with the 4 hours and ETH is going to be with 3 hours. And also, I added the possibility, if some of you are interested, to have a risk management inside. However, in this case, for example, I'm only using a value for stop loss of 8%. Everything else, since it's so big, it's not being taken into account. So we are always going to exit based on the rules, from the indicator. And in this case, you can see that every year it was positive. Some years, of course, more than the others. It's going to suffer a bit, I would say, when you have a full period of side market. Like you can see, for example, in 2019 and 2020, the beginning, we had a lot of side market. But after that, slowly, when you start to have a trend, doesn't matter if it's going to go upper or lower trend, you're going to take the benefits of it. You can see, for example, from the profit made, that long, although long, it represents the most. In this case, it's more like 2/3 out of it, and then we have the short. But still, it's yeah. But you can see the profit factor, it's almost 4 for long and 2.3, for short. But it's pretty damn good. So yeah, that's more or less regarding the strategy. Now, in order of how to properly set it up, as I said, we have BTC USD for 4 hours, and then we have ETH USD for 3 hours. This is the values that I'm using, you can see on both of them. In this type of calculations, from the strategy, I'm using the commission of 0.1%. So yeah, we have that in account, even though the actual value is 0.03, but doesn't matter. So Now, how to properly set up the alert? So when you enter in the indicator, you are going to see that we are going to have the strategy. The purpose of the strategy is to tell us, more or less, to give an idea how it performed over a certain period of time. And in this case, we have from 2015 until the present day. And you can see in this case, we beat the buy and hold by 13 times during all this time. Of course, you can take some specific times amounts. Like, for example, 2017, the buy and hold, it would beat us. But then, for example, in 2018 and 2019, you'll actually lose 70% and 80%, you know, by just buying and holding. So that's when this strategy is going to appeal convenient. When, like I said, when you can take the benefits both from the long and the short movement. Now, getting back to the alerts, as I said, so we have, when we go in the alert, I always recommend to use once per bar close. So in this case, with once per bar close, you are going to avoid 100% the repaint issue, because this type of calculation and crosses, just like a moving averages, can happen within a candle, but then they can disappear after that. So the best is, like always, to use alert on the candle close. So this way you are not going to have this type of issue. So let's assume, for example, like I said, you have long exit, short exit in this case. So yeah, let's assume, for example, you would have 3 commas bought. So in this case, for example, you would be BTC long entry, and here you would paste the message from 3 commas bought for long, once per bar close. And then of course you'll do the same for long exit, short, and short exit. So yeah, overall, as I said, you know, now to speak about the pros and cons of this strategy. So as I said, among all my strategies that I have, you know, from a Trader Life or Hercules Trading, this one I consider it to be the most stable one and the safest one at the same time. The reason behind it is that since we are using such a big time frame, you know, we are not going to be affected so much, you know, by what's happened with the lower time frames, and we are not going to have so much noise. When we are going to have side market periods, for example, we are not going to be affected so much, because those movements are going to be 5-10% on average, and we are still going to be in a trade during all that time. So we are not going to have lots of exits or lots of losses in a row. In terms of, like I said, of the profits, you can see that using the same type of settings, it's working very nicely on both ATH and BTC, beating the buy and hold by a huge margin with the compound effect, of course. It works both long and short, which is as well a very nice criteria. And so yeah, in a resume, it's a trend trading strategy. Now for the inconvenience, I would say that the lack of not having, you know, a stop loss can be scary, you know, I would say, for some of the traders. However, this can be fixed. You can make some other settings, and you can always use a stop loss and a take profit in that case. So yeah, the values are going to be different. They probably are going to be lower. However, you are going to be much safer, you know, with this type of risk management. It's not suited for leverage. So, you know, I don't usually recommend leverage with it, because you can see, yeah, we have 7 years of data, 6-7 years of data, but in these 6-7 years of data, we have a drawdown of 37%. And in this case, yeah, 37 as well. So with a 2 leverage, you know, you would have 75 approximately. So it's pretty damn big, you know, to be honestly. Yes, as well, we don't have a big win rate, you know, like we don't have a big win percent ratio, but we have to also admit that we have a very huge profit factor. You can see, you know, more or less, here is 55% with 2.8, but here is 45 with 3.2, which is pretty damn good, you know, out of 100 trades. So yeah, it means that you can have much more multiple losses in a row, but when you are going to win, you are going to win big. So yeah, and I would say yeah, as well as a con, although many of you, it's not necessarily a con, it's just a point of idea based on the, you know, the preferences of each other. The thing that, you know, it's using such big time frames, like 4 hours or 3 hours, it's meant, you know, for swing trading, which at the same time it means it's meant for people who have patience, you know. So you are not supposed to change the stuff and and modify the trades and so on, unless you know what you're doing. Like for example, you are close to an ATH or an ATL and you see, for example, some bounce and stuff like that. But yeah, that's more complicated, in order to use it properly with the manual point of view. So yeah, I believe with this I cover it all regarding the calculus strategy. So yeah, hope you enjoyed and see you next time.